morning, students. Welcome you all once again in the live virtual classes organized by Board of Studies of ICAI. Students, today we are going to cover a very important standard in IND-AS 115, revenue from contract with the customer. This standard is important from the real life perspective as well as examination perspective. So friends, if you want to make a career after becoming a chartered accountant, if you want to make a career in the financial reporting, controllership vertical, right? Or even in the CPNA vertical or some other verticals of finance, the question may be asked from the revenue standard in your interview, right? And if I talk about examination, sure sort, one question will be asked from this standard in IND-AS 115. That is why ICAI has allocated 6 classes to this standard. So we will cover this standard in 18 hours. 6 multiplied by 3 hours. We will be covering this standard in 18 hours. Okay. So we'll discuss this standard for 18 good hours. Okay. And the name of the standard is revenue from contract with the customers. Friends, now let's discuss one by one the title of the standard. When I say title of the standard, means what about revenue, what about contract, what about customer, right? So 3 keywords have been used in this standard. The first one is revenue, the second one is contract, the third one is customers. Okay, correct? So let's move on. And friends, talking about the agenda, so we will be covering the scope of this standard, and this standard revolves around the 5-step model, right? So scope means what is getting covered in this standard. We are going to cover the scope, and then we will be covering the heart of the standard, which is 5-step model. This standard talks about 5-step model for measuring, for recognition of revenue for any industry. So this is a single standard which covers the measurement and recognition of revenue by using 5-step model. So we will be discussing this 5-step model when we will be sailing through this standard. Okay, friends, first of all, let's understand the basic terminology and let's understand the context of the entire standard. Okay, if I talk about overview of revenue standards, friends, in our accounting standard we have 2 standards which talks about revenue. Yes or no? We have 2 standards which deals with revenue. Accounting standard 9, and the name of the accounting standard 9 is revenue recognition. Revenue recognition. The title of the accounting standard 9 is revenue recognition. Means accounting standard 9 focuses more on recognition of a revenue rather than measurement of a revenue. Means measurement comes from a different standard probably, but this standard focuses on the recognition part, right? But if you compare the title of revenue recognition with IND-AS 115 title, IND-AS 115 title is only revenue arising from the contract happening with the customer. Revenue arising from the contract happening with the customers. So it means this revenue from contract with the customer covers the measurement, recognition, and every facets of revenue. Okay. So friends, in our accounting standard, old accounting standard, ICAI, we have accounting standard 9 which deals with revenue recognition, and accounting standard 7 which deals with the revenue recognition for the construction contracts, right? So AS 7 deals with the revenue accounting of construction industry. Means we have 2 standard, AS 9 and AS 7, which deals with the recognition of revenue. Okay, and this is applicable as on date in case of companies who are applying accounting standard, right? So in accounting standard, 2 standards we have. Now friends, as we are aware, our IND-AS are the converged version of IFRS applicable to India. Okay, so friends, up to December 2017, right? So up to December 2017, in IFRS there were 2 standards which deals with revenue. Like in accounting standard we have AS 9 and AS 7 on dealing with the revenue. In IFRS also there were International Accounting Standard 11 and International Accounting Standard 18. These 2 standards were there which were dealing with the revenue from the construction industry and the revenue from the other standard industry. Okay. Now friends, in India, we have also two standards which dealing with revenue. Number one, Ind AS 11 and Ind AS 18. Ind AS 11 was dealing with the construction contracts, and Ind AS 18 was dealing with the revenue, right? But effective from 1st January 18, in IFRS, this Ind AS 11, Ind AS 11 and Ind AS 18 was deleted, and it was superseded by IFRS 15, and the title and the name of the IFRS 15 was Revenue from Contract with the Customer. So friends, this standard, when this standard came effective from 1st January 2018, it deleted IAS 11 and IAS 18, and single revenue standard for all revenue was notified, and we had only a single standard on revenue, which is IFRS 15. Friends, likewise, when effective from 1st January 2018, these two revenue standards got changed. Okay. So in our Ind AS also, effective from 1st April 2018, the old Ind AS 11 and Ind AS 18 was deleted, and a new standard which is in line with IFRS 15 was notified. The name of the new standard was Ind AS 115, Revenue from Contract with the Customer. It deleted Ind AS 11 and Ind AS 18, and single revenue standard for all revenue was notified. And my dear friends, in accounting standard era, right, in accounting standard regime, AS 9 and AS 7, these are the two standards which are applicable as on date. In IFRS regime, there is a IFRS 15 which is applicable as on date. In Ind AS 115 is applicable as on date, which dealing with revenue. I hope this is clear to everyone, right? Sir, why in IFRS it was effective from 1st January, but in Ind AS it is effective from 1st April? Because globally calendar year concept is there, but in India financial year concept is there. Calendar year concept and financial year concept, right? This is the reason. Okay, right? Clear? I hope it is clear to everyone. Yes, great. My dear friends, now as we understood the overview of the standard, I mean to say the name and number of the standard in accounting standard, IFRS and Ind AS, now the time has come to discuss the title of the standard, Revenue from Contracts with the Customer. Friends, three keywords are there: revenue, contracts and customer. Three keywords are there: revenue, contract and the customer. Okay, revenue, contract and the customer. Friends, what is meant by revenue? And let me ask you a question. Which is the bigger word? Whether revenue is the bigger word or the income is the bigger word? Have you heard about the word revenue, income? Which word is wider? Word, I mean to say, the meaning of which word is wider? Whether revenue is wider or income is wider? Sai Kiran, Selendra, Rohan. Which terminology, the meaning of which terminology is wider? Rohan has answered, but I'll not tell his answer right now. Selendra and Sai Kiran, what is your view? Whether income is a wider meaning or revenue is a wider meaning? I'm waiting for the answers from both of you.
Revenue, sir.
Revenue, okay. Sai Kiran, what's your answer? Whether revenue is wider or income is wider? Sai Kiran is also saying revenue, and Rohan has told income. My dear friends, income is a wider word. Income has a wider meaning, right? Not revenue. So why? Let's understand it. Revenue means, revenue is something, revenue is an income which is arising in the ordinary activity of the business, right? Revenue is an income which is arising by the ordinary activity of the company, ordinary activity of the business, right? So revenue is arising by the ordinary activity of the business, which is the main activity, okay, which is arising from operations. That is why we are calling it as a revenue from operations. What is the gains? What is other income? Gains are those which are not arising from the ordinary activity of the business, like other activity. For example, you have sold goods. Selling a goods is your main activity or other activity? Selling a goods is your main activity. For example, I am a teacher. Teaching teaching is my main activity or other activity? Teaching is my ordinary activity, main activity, right? So whatever I'm earning from teaching, whatever I'm earning from teaching, is it revenue or not? Yes, it is a revenue from operations, right? But since I'm teaching, I'm earning, so I'm also depositing my money into the fixed deposit. I'm also investing in the shares. So by investing in the shares, I am getting some capital gain. When I'm selling the shares, I'm also getting dividend. I'm also getting interest on the fixed deposit. Tell me, being a teacher, whether investing in stocks, investing in fixed deposit, is it my main activity or is it my other activity? What is that? It is my other activity. It is not my main activity. I am not running my family. I am not running my, bread and butter by investing in stocks, right? This is not my main business. I am not paying my rent just by earning from the fixed deposit interest. No, this is not my main activity, right? So friends, the gains are the income which is not arising from the ordinary activity. Means revenue is also an income, the gains or other income is also an income, right? That what is the basic difference? Revenue is arising from the operations and gains are arising from the other than the operations, right? What is the income? Income is the total from the main activity and the other activity, right? So Sai Kiran and Sailendra, now you understood. Income is the total of the revenue from operations plus other income. You must have seen the P&L also. Have you seen the P&L? If you see the schedule 3 format of the P&L, the first line item is revenue from operations. The second line item is other income. And the total, if you see, it is written as total income. Total income means income includes revenue, not revenue includes income. Income includes revenue, income includes gains also. Okay, right? Clear? Right? Revenue is an income arising in the ordinary activity of the entity, and gains are the income which is arising from non-ordinary activity or other activity of the entity. Right? So we understood the first terminology, revenue. Now, Ambuja Cements Limited. Ambuja Cements Limited is earning from the sale of the cements, and since they have the surplus money, they are also investing in the deposits. Now tell me, what is my revenue and what is my gains or other income? Tell me friends, what is my revenue and what is my gains or other income? Sale of cement and interest on deposit. Is it a revenue or is it a, what is that? What is my revenue and what is other income? Sale of cement is my revenue and interest is my gain. Okay. Yes, gain or other income. Sale of cement is sale of cement is revenue and interest on deposit is gain or other income. And yes, is it a revenue? Yes. Is it a revenue? Yes. Right. Both of this will come as a income, not revenue, income. Right. So income is total of sale of cements and interest on deposits. What is my revenue? Sale of cements. What is my gain or other income? Interest on deposits. Okay. Clear? Is that clear? Yes or no? Yeah. Okay. So revenue is an income arising in the ordinary course of the business of the entity. Now coming to the contract word. Friends, what is meant by the word contract? Have you heard about the word contract? Have you heard about the word contract? Yes. So many times, mercantile law, business law. Have you read Indian Contract Act 1872? Yes. In your CA Inter days, in your BCom. Right. So Ravinder, just now we have discussed the title of the standard, revenue from contract with the customer, and we discussed which is a wider meaning, whether revenue has a wider meaning or gains is a wider meaning. So we told that revenue is an income which is arising in the ordinary activity of the entity, and gains are those which are arising from the other activity of the entity. For example, Ambuja Cements sold cement, right? It sells cement. So selling a cement is a revenue, but they are also depositing their surplus funds into the fixed deposits. So earning and interest is a gain or other income, and revenue is and income is both revenue and other income also, right? Okay. So good morning, Ravinder. So this is what we discussed as of now. So revenue is an income arising in the ordinary course of the business of the entity. And what is a contract? Contract is an agreement enforceable at law. Contract is an agreement enforceable at law. Okay. So friends, contract has a meaning. Contract means an agreement which is enforceable at law. Means there has to be a contract, right? There has to be the parties has an enforceable obligation to adhere. The parties has enforceable obligation to adhere means there has to be a consideration. There has to be commercial substance. Okay. There has to be a commercial substance also. So contract means an agreement enforceable at law. It could be oral, it could be written. But if the contract is not enforceable at law, because let's say your friend has cleared CA final before you, means your friend has joined before you. Okay, your friend has joined before you. He joined after 12th and you joined after graduation. So your friend was a school friend and he was your good friend. He committed you that don't take FR classes, right, from anyone else. I will teach you FR. And your friend has committed you to teach FR just as a friendship. Okay. So he's not charging you. He said that every weekend I'll teach you. Okay. Friends, it is just kind of a friendly promise. Okay. It is just kind of friendly promise. If he will not teach you FR, right, will you be able to sue him in the court of law? Will you be able to sue him in the court of law? Absolutely no. Absolutely no. Why? It is not an agreement which is enforceable at law. Not an agreement. Now another example. You joined a coaching center, right? You paid a handsome amount of money. You paid 20,000 rupees for the FR classes. Okay. You got the receipt, you paid the money. Okay. And you got the kind of syllabus also. You got the curriculum, and the teacher committed, the coaching center committed that every Monday, Wednesday, Friday and Sunday we'll have 4 classes in a week, 3-hour classes, 6 to 9 for example, and we will be able to complete the course in the next 4 months, right? And we will provide you total 4 classes a week, 16 classes a month. Okay. And 64 classes plus almost 6 classes, etc. We will provide you 70 classes and we will cover the entire course in 70 classes. Everything was fine, everything was decided. Okay. But the coaching center has not provided you the class. Will you be able to sue that coaching center for not providing you to the FR class or no? Will you able to? Yes. Of course, yes. Ravinder said yes. Absolutely yes. Why not? You paid a consideration. You are the customer. That coaching center has committed that they will provide you FR classes. Then why not? Why can't you sue that coaching center? Yes, you can sue that coaching center, because when you are paying the coaching center, when everything was agreed, right, it was an agreement which is enforceable at law, right? So we understood the meaning of the contract. Now customer, what is meant by customer, my dear friends? What is meant by customer? Customer means कष्टों में मरा हुआ. Yes or no? Customer. Yes or no? Right? So customer is कष्टों में मरा हुआ. Okay. So what is the meaning of sir? I'm sure this कष्टों में मरा हुआ is not a meaning in Ind AS or IFRS. Sir, what is the real meaning of the word customer? So customer means a customer is a party. He is a person. He is a party. Customer is a party who obtains goods or services. Yes or no? If you are a customer, you are always in the receiving hand. Yes or no? A customer is always in a receiving hand. He is receiving a goods or he is receiving a services. A customer is a party who obtains goods or services which is an output of the entity, right, in the ordinary course of the business. A customer is a party who obtains goods or services. Sir, which goods or services? Which goods or services? customer is a party who obtains the goods and services, that goods and services which is an output of the entity in the ordinary course of the business, and and in the and in exchange and in exchange and in exchange for the and in exchange for a consideration and in exchange for a consideration and in exchange for a consideration, right? A customer is a party who obtains goods or services which is an output of the entity in the ordinary course of business and in exchange for a consideration, right? Means customer is also always paying a money to the service provider or the provider of goods, to the vendor or supplier of goods and services. Is that clear? Whether the meaning of revenue, income, contract, customer, is that clear to you or clear to you? Guys, we are clearing basic. And let me reiterate again, friends, this is a very important standard, very lengthy standard, very detailed standard. And in the next 6 days, and we will be covering this standard. Institute has given 6 classes for this standard. And we will be covering this standard in 6 classes, which is 6 multiplied by 3, 18 hours. And in these 6 classes, we will discuss more than 50 questions, more than 50 examples from the board of studies and the self from my side. Okay. And we will be covering each and every concept with example in the Excel file, right? So that you will have a notes prepared at your end. Okay. Right, my dear friends. So we covered this part. So now let me give you another example. So there is a party, there is a company which is in the business of selling cars. There is a company which is in the business of selling cars, my dear friends. Now, to whom these companies are selling cars, whether those parties are customer or not? Of course, yes, those parties are customer to whom it sells cars. This company, right? The owner, who is the owner of this company? This owner has gifted a car to his son. The owner is gifted a car to his son. Now tell me whether it will fall under Ind AS 115. Number 1, is it a contract with the father and the son when the father is gifting a car to the son? Number 2, whether son is a customer in this case when the father is gifting a car to the son? Yeah, है या नहीं है? है या नहीं है? I am expecting an answer from more students. I have got the answer only from Rohan and Ravinder. What about Manoj? What about Selendra? What about Sai Kiran? No, it is not a contract, and the party is not a customer, and hence it is not a revenue from contract with the customer, right? And hence it is not a revenue from contract with the customer. This will not come under the Ind AS 115 because it is neither a contract nor a customer, hence it will not fall under a revenue from contract with the customer. Okay, is that clear? Is that clear, my dear friends? Should I write this example also? Should I write this example also? And see, who is a customer is a party who is receiving the goods and services while the son is receiving the car, which is in the ordinary activity of the entity, but there is no consideration. Okay, but there is no consideration. Okay. An entity is in the business of selling car. The entity is selling the car to its customers. Okay, to its customers. The owner of the entity gifted the car to his son. Okay. If that car would have been sold to other parties, the value is 10 lakh rupee. The value is 10 lakh. Whether this transaction falls under Ind AS 115 and the entity should recognize revenue on the basis of fair value. Tell me whether we should do it. Whether we should do it. Yes or no? Example. Since it is a gift and hence there is no contract between the entity oblique father and the son. Number 2, further, while the son is receiving the goods, which is car, which is also an output. Yes or no? Which is also an output in the ordinary course of the entity, but the son is not paying any consideration, and hence he is not a customer, मरा हुआ customer, and hence he is not a customer, In this case, neither contract is there, nor customer is there, and hence it will not come under Ind AS 115. It is a cost to the entity. It is drawings, right? Now is that okay? I have written it in detail, okay, that it is not meeting the last leg exchange for a consideration, the last leg of this transaction, and hence it is not a customer. I hope it is good to all of you. Yes, when you read this example, you will be able to understand the meaning of the contract, customer, revenue, everything, right? Now, friends, another example. RIL, Reliance Industries Limited, is distributing dividend to the shareholder X Limited. Reliance is distributing dividend to the shareholder X Limited, right? So who is receiving? X Limited is receiving, okay? X Limited is receiving a money from RIL. Whether in the books of X Limited this dividend is a revenue? Whether in the books of X Limited this dividend is revenue? Yes or no? Whether in the books of X Limited this dividend is a revenue? Yes or no? बताइए. Manoj is saying yes. Okay. Depends whether investment entity or not. Even though if it is an investment entity, right? So is there any contract that this entity will provide a dividend every time? Is there any contract? If there is an investment entity, so let's analyze, let's conclude, let's analyze. So you understood Reliance Industries Limited is distributing a dividend. So whether distribution a dividend for any company, for distribution of a dividend for any company, is it an output in the ordinary course of the business? Distributing a dividend is an output which is arising in the ordinary course of the business, whether the job of the entity is to distribute the dividend. Yes or no? क्या उस एंटिटी का काम डिविडेंड बांटना है? रिलायंस, व्हाट इज द मेन रोल ऑफ रिलायंस? What is the main job of Reliance? What is the output of the Reliance? Reliance is into the oil, refinery, gas, petrochemicals, textile, right? Telecom. Okay. Reliance is into O2G, oil to gas, right? O2R, oil to refinery. Oh, right. Reliance is into telemedia, telecom. Okay. Petroleum products. Reliance, whether Reliance output is to distribute dividend? Yes or no? ये बात आपको समझ आई या नहीं आई? Reliance output is not to distribute dividend. Reliance output is to provide goods and services. Okay, goods and services. Manoj, is that clear? So, whether dividend income in the books of X Limited will be covered under Ind AS 115, my dear friends. First of all, having a revenue is not a contract between the dividend. Having a dividend is not a contract between the dividend recipient and dividend provider. If they will declare dividend, if the board will approve it, the shareholder will approve it, they will get it, otherwise not. Number one. Number two, so whether somebody who is receiving a dividend, whether that party is a customer to that company, whether X Limited is a customer to that company in the capacity of receiving a dividend, क्या X Limited कस्टमर है इस ट्रांजेक्शन के लिए, है या नहीं है? So can we evaluate? Yes. So whether we need to see whether X Limited is a customer, in this case, while receiving, X Limited is a customer when he is receiving a dividend, right? So whether we need to see whether X Limited is a customer in the capacity of recipient of the dividend. In the capacity of the recipient, we need to see whether X Limited is a customer in the capacity of recipient of the dividend. Okay. So in this case, we need to look at three aspects. Aspect number one, whether X Limited is receiving goods and services which is an output of the entity in the ordinary course of business, right? No, absolutely no, right? सही है ना? No तो आंसर सही है ना? So it is not an output in the ordinary course of the business. Yes. Number two, whether X Limited is paying any consideration to receive the above goods and services, right? Goods and services. Of course, no, right? So they have invested in the shares, okay? So first of all, there is no goods and services, and he is not paying any consideration also, right? So here, X Limited is not a customer, and this dividend is not a revenue. It is not a revenue. It is an other income. Right? excluding not a customer, and this is dividend is not a revenue, it is an other income, right? So it will not come under, it will not come under Ind AS 115, right? Clear, my dear friends? I hope is that clear? Yes. So friends, on every concept we will discuss these kind of example so that you will have a full clarity, on the Ind AS 115. I hope you are okay with these kind of examples. Yes, like I have taken the example of Ambuja Cements also example. Okay, so example, this is my another. Okay, now friends, as I told you, now we'll enter into the helicopter. Sir, so for investor receiving dividend would be covered by conceptual framework as there is no other Ind AS for this other income. So Rohan, dividend is covered under Ind AS 10 also, where it says that dividend will be recognized when there is a right to receive payment will be established. When there is a right to receive dividend will be established, and of course from conceptual framework as well. Okay, right? So Ind AS 10 and conceptual framework both. The clarity is given in Ind AS 10 also. Okay. Shall I move forward? Shall I move forward, my dear friends? Yes. Now, friends, since this standard is a long standard, Ravinder, can you please keep on mute? Since it is a long standard, so first of all, we will see the helicopter view of this standard. First of all, we will see the helicopter view of the standard. Should I show you the helicopter view या छोड़ दूं? दिखाऊं मैं आप लोगों को हेलीकॉप्टर व्यू पूरे स्टैंडर्ड का? Yes. Friends, this standard talks about 5 aspects, right? When we will delve into this standard, of course, we will discuss the scope of this standard, and this standard has 5-step model. For every question, this standard has a 5-step model. Means if you have to measure, if you have to recognize revenue for any industry, for any company, this standard has given you 5 steps, Mool Mantra. This standard has given you Mool Mantra in the form of 5 steps. Okay, this standard has given you 5-step model. What is this 5-step model? The first step is identification of contract. Right, I'm just setting the context. We have 6 classes, and in every class we'll discuss one step in every class. Okay, so the first one is identification of contract. First of all, you need to identify, is it a contract with the customer? Is it a contract with the customer? Now we understood contract is an agreement enforceable at law. Contract could be oral, could be written, could be express, could be implied. Okay, and for being a customer, there has to be a goods or services which this entity, this party is receiving, the goods or services which this entity, this party is receiving in exchange for a consideration, and those goods or services which this customer, this party, this entity is receiving, it has to be what? It has to be the output in the ordinary course of the business of that entity. It has to be output in the ordinary course of business of the entity. Okay, right, my dear friends? Now, so we need to identify is it a contract? Once you identify it is a contract, then you need to see how many performance obligations are there in this contract. How many performance obligations are there in this contract? What is meant by performance obligation? Means the entity which has taken money, which has taken a consideration from the customer, the entity promises to deliver what? The entity promises to deliver which kind of goods and services? The entity promises to deliver which kind of goods and services? this is the output. This is the kind of, so which delivers and delivers which goods and services. What are the output of that entity? For example, Tata Motors Limited. Tata Motors has sold a Nexon car, and Tata Motors told, I am selling you a Nexon car, dear customer, and I will also give you services for the 5 years free of cost. Tell me, what are the performance obligation of Tata Motors, and how many performance obligation of Tata Motors in this case when he is selling a car to the customer? Tell me, my dear friends. Tell me. Yes, there are two performance obligation. Manoj, you are absolutely right. Rohan, you are absolutely right. One, sale of car. Number two, providing services, providing maintenance services, providing maintenance services for 5 years. Yes or no? Yes, providing maintenance services for 5 years. Okay. So one, they are providing the goods, which is tangible item, which is car. Number two, they are providing the services. Okay. So whatever Tata Motor is receiving from customer, it is not receiving only for the car, it is receiving for the car plus services. Nothing is free in this world. What do you think? These companies are giving you free of cost. They have already factored. They have already factored the charges. They have already factored the charges. Once they are providing you those goods and services, they have already factored that if I will receive this much money, I will be able to compensate them with this amount, this amount. This is my margin, and this is the benefit if I'll provide them maintenance services, right? If they will not give you the maintenance services free of cost, and they will make the price of the car down, probably you will not go to them for getting the services done. Probably you will get the services done from some other service center, right? Or some other unauthorized service center also. Okay. So you can do that. For example, in my case, so I got the services of Maruti from the same showroom or the same service center for 2 years. But after that, since my friend has a service center, so I got my car service from his service center, and there was no at all no problem in that car, right? So friends, the second aspect is identification of performance obligation. Third, what is the transaction price? What is the transaction price? The price at which the transaction is happening. What is the transaction price? Okay, that is third one. Means what is, for example, Tata Motors has sold car for 10 lakh rupee. So 10 lakh rupee is the transaction price. 10 lakh rupee is the transaction price. Okay, 10 lakh rupee is the transaction price. Fourth, allocation of price to the performance obligation. Now, the customer is paying 10 lakh rupee upfront, he get the car, but he will get the 5 services in the next 5 years. Now, how to allocate this 10 lakh rupee into the car and into the services? Okay, into the car and into the services. So, allocation of the price, allocation of transaction price into the performance obligation, right? Fifth, now you need to recognize the revenue at a point in time or over a period of time. Then the last comes as a disclosure. Then you need to recognize a revenue at a point in time or over a period of time, or over a period of time, at a point in time or over a period of time. Okay, I hope, just from the setting a context perspective, I hope you are okay with this 5-step model. Number one, you need to identify, is it a contract with the customer? If it is not a contract with the customer, it will not fall under Ind AS 115. Number two, you need to identify how many performance obligations are there. Number three, you need to see what is the transaction price of this transaction. Number four, you need to allocate the transaction price into the multiple performance obligation, right? If there are multiple performance obligation. Number fifth, you need to recognize revenue at a point in time or over a period of time. Like in this case, when the Tata Motor is selling the car to the customer and providing the keys to the car, providing the keys of the car to the customer, this selling of a car revenue has to be recognized at a point in time or over a period of time? Yeah, this has to be recognized at a point in time, at a particular period, at a particular date, at a point in time. But what about services? What about the services which has to be provided in the 5 years? What about those services? Over a period of time. For those services, over a period of time, for those services. Okay, right? Clear? So now, my dear friends, with this context in hand, we will discuss a helicopter view of Ind AS 115. Okay. Voltas Limited has sold an air condition to Mr. Ram. Voltas Limited is a company. We have to recognize revenue in the books of Voltas Limited. Voltas Limited has sold an air condition to Mr. Ram on 15th March 2023 for rupees 50,000. The company has only delivered the AC unit till 31st March 2023. The company has only delivered the air condition unit till 31st March 2023. Okay, till 31st March 2023. Okay, so this transaction was happened on 15th March when the Voltas has sold the AC to Mr. Ram. Mr. Ram has purchased, Mr. Ram has paid the consideration. Mr. Ram has paid the consideration to this company Voltas on 15th March, and company delivered only the AC unit till 31st March 2023 in the financial year 22-23. Now, the company promised to provide AC unit, stabilizer, installation, and one free service every year to the customer over a period of 2 years. So the company promised to provide air condition unit, air condition unit, the stabilizer, the installation service, and one free service for the 2-year period. One free service to the 2-year period. This is what this company has promised. Okay. The stabilizer and installation services was provided on 20th May 2023. Stabilizer and installation service was provided on 20th May 2023, means in the financial year 23-24. And the customer has availed the free service in the November 2023. Customer has availed the first free service in November 2023, means in the year 23-24. Being an accounting expert, the company wants your guidance for recognition of revenue in 22-23, 23-24, and 24-25. Assume that the customer has not availed the second maintenance service at all. Tell me, how much revenue has to be recognized in 22-23, 23-24, and 24-25 and 24-25? This is the question, my dear friend. How do we handle this question? First of all, let's measure this question through the 5-step model. Okay. Step number 1. Identify the contract with the customer. Friends, tell me, is it a contract with the customer? Yes or no? Is it a contract with the customer? Is it a contract of the customer? Yes, it is a contract of the customer. Contract of the customer does not mean he has to write on a stamp paper. आप लोगों ने पढ़ा है ना, contract can be oral, can be written, can be expressed, can be implied. Yes or no? A contract can be written, can be oral, can be expressed, can be implied. Yes. You went to a grocery store and you bought a Maggi of 11 rupee. Is it a contract with the customer? For the grocery dealer, is it or let's don't take the example of grocery dealer, take the example of Reliance Retail. You must have seen the Reliance Smart. So Reliance is selling Maggi. You went to the Reliance and you bought a Maggi of 11 rupee. Is it a contract between you and the Reliance? Yes, it is a contract between you and Reliance. So it's an express contract, it's an implied contract, mutual contract, right? Reliance is giving you a Maggie which has to be free from all the defects, which has to have a life, right? The expiry should not be there. It should not be expired product. You are paying a consideration. Reliance is giving you Maggie, right? So friends, it is a mutual contract. Yes. Identify the contract with the customer. Yes. Determine the performance obligation. How many performance obligation are there? Tell me. So how many? The first performance obligations, sale of AC unit. Number two is stabilizer. Number three is what? Installation service. Number four is maintenance service. Maintenance service. Okay. So how many performance obligation are there? There are the 4 performance obligation. Okay. There are the 4 performance obligation. 4 POs. 4 POs. Number 3, determine the transaction price. Determine the transaction price. What is the transaction price in this case? What is the transaction price? Determine the transaction price. Transaction price is 50,000 rupees. It is 50,000 rupees. Okay. Step number 4. Allocate the transaction price into the performance obligation on the basis of standalone selling price of performance obligation. Standalone selling price means the fair value of the performance obligation. So how do we need to allocate? Let me tell you. So first of all, performance obligation, right? Performance obligations. What is my performance obligation? Obligation. Number 2, standalone selling price, SSP, standalone selling price oblique, we can call it as a fair value. Standalone selling price. Let me write the short form of standalone selling price also. Okay, assuming the standalone selling price of this air conditioned unit is only 48,000 rupees. If the company would have sold only the air conditioned unit, it would have been 48,000 rupees only. Okay, if the company would not have provided the other services. Stabilizer, if you go to the market and purchase the stabilizer, the market value of stabilizer is 5,000 rupees. Installation service, if you call a mechanic and get the installation done, he will charge 2,000 rupees. And if you want to have a maintenance, services, right, you want to have a AMC, okay. If you want to have a AMC, it will cost you, let's say, 4,000 rupees. Okay. What is the total? The total is 60,000 rupees, or let me write as a 5,000 rupees. Okay. 60,000 rupees. Now, allocation. What is the actual price? So the total value which is coming at is 60,000 rupees. We are getting a 60,000 rupees product at 50,000 rupees. We are getting a package worth 60,000 rupees at 50,000 rupees. How will I allocate this 50,000 rupees into these performance obligation? Tell me. कैसे allocate करूं मैं? How should I allocate it? बताइए. Very simple unitary method you need to apply. In the ratio of standalone selling price, 50,000 which is the transaction price, multiply by 48 divided by 60. 50,000 multiply by 5 divided by 60. 50,000 multiply by 2 divided by 60. 50,000 multiply by 5 divided by 60. What is my total? My total is coming out at 50,000 rupees. Guys, why it is important? Why it is important to allocate the transaction price into the multiple performance obligation? What is the need for that? Why? Why it is required at all? क्यों जरूरी है? Tell me why it is required at the first place. Why it is required at the first place? Because when you satisfy the performance obligation, then only you will be able to recognize the revenue. You are not required to recognize revenue upfront. If you see this question has told while the consideration has been given on 15th March 23, but in the first year 22-23 only AC unit was delivered. In 23-24 only stabilizer installation service and the one maintenance service was delivered, right? So since the concept is whenever you satisfy the performance obligation, whenever you fulfill the performance obligation, then only you are allowed to recognize income, recognize revenue. Okay. What was the case in case of accounting standard? Are we doing the same thing in the accounting standard also? Absolutely no. In the accounting standard, for example, if the company has sold car with a free service for the next 5 years, the company will recognize the entire revenue. The company is not doing any allocation. Okay. The company was recognizing the entire revenue. Number 5, step number 5. Now, you know the revenue portion for every performance obligation. Now you need to recognize the revenue at a point in time or over a period of time. Or over a period of time. Okay. So friends, sale of AC unit, this revenue is to be recognized at a point in time or over a period of time? At a. What about stabilizer? What about maintenance service? What about installation service? Sorry, not maintenance, installation service. It has to be at a point in time. It has to be one installation only. It has to be at a point in time. What about maintenance service over 2 years? Over 2 years, the revenue has to be recognized over the period of time. Means in the first year and the second year. Over 2 years. Okay. Is that clear? Now friends, I hope these 5 steps are clear to all of you. Let me know if that is clear or not clear. I hope these 5 steps are clear to all of you. Let me know if it is clear or not clear. Very much clear? Yes. Now, can I show you the accounting entries also so that this entire loop will close? Yeah. What is the accounting entry? What is the accounting entry? First entry, FY 22-23, 15th March 2023. SSP allocation, where we will get value, sir? So Manoj, when I'll discuss the 4th step, now I will tell you from where you will get the value, right? So you don't have the invoice breakup, Manoj. You don't have the invoice breakup. That is why you have to identify the fair value. Here in this question, I have given you ready-made, but even this value was given in the question, or if the value is not given, then you have to identify the value. How you will identify the value? So I will tell you when I will be covering step number 4. Step number 4 will give you some tools and techniques by which you can arrive at a fair value. Okay. Okay. Right. Now, shall I take you to the accounting entry 15th March 2023? What is 15th March 2023 accounting entry? Bank account debit. Bank account debit by what amount? Your bank account will be debited by what amount, my dear friends? Your bank account will be debited by which amount? बताइए. 50,000 rupees. How much money you have received? Your bank account will be debited by 50,000 rupees. Okay. 50,000 rupees. Your bank account will be debited. Now, debit bank. What is the next entry? How can I close this entry? You have debited the bank. That is right. But what you will credit? To revenue. How much revenue will credit on 15th March? How much revenue will credit? To revenue from sale of AC unit. Right? Credit. How much revenue will credit from the sale of AC unit? 40,000 rupees. 40,000. 2. Where the balance will go? To the deferred revenue liability. To the deferred revenue liability. What is my deferred revenue liability? 10,000 is my deferred revenue liability, right? 10,000 is my deferred revenue liability. Okay, friends. Being revenue recognized to the extent of satisfaction, to the extent of delivering the first performance obligation. To the extent of delivering of first performance obligation. Is that clear? I hope it is clear to all of you. Now, my dear friends, so in this year, the bank was debited by 50,000, the revenue was credited by 40,000, and the liability was credited by 10,000 rupees. This is what it is there. So in the P&L account, how much revenue has come in the P&L account? In the P&L account, revenue of 40,000 has come. Okay, so this is your revenue in the year 22-23. Now let's come to the 23-24. Now what should we do in the 23-24? What should we do? We should recognize the revenue from what happened in 23-24. In 23-24, the next date is what date? The next date is stabilizer and installation service was provided on 20th May 2023. 20th May 2023. So 20th May 2023. So what should I debit? I haven't received any money. In the next year, I'm not getting any money. So what should I debit? I should debit. You are absolutely right. Should debit. Deferred revenue liability. I should debit. Deferred revenue liability account debit. Deferred revenue liability account. I will debit. Credit. What I'll credit? Two revenue stream. Number one, two-step revenue from sale of stabilizer, and two, revenue from installation service. Right? So revenue from sale of stabilizer is how much? Revenue from sale of stabilizer is 4167. Revenue from installation is how much? It is 1667. What is my total revenue? This plus this is my total revenue. 5833. So deferred revenue liability has to be debited by 5833. Right. Now The next part. And the customer has also availed the free service in November 2023. November 2023. So let's write here being revenue recognized to the extent of delivering the second and third performance obligation, right? Now let's come to 30th November 2023. Now again, when I'm providing the first maintenance service, I'm not getting any money. What should I do? I should deferred revenue liability debit to revenue from maintenance service, the first maintenance service. How much amount I will credit? My maintenance service is how much? 4167 for 2 years. So now I'll record for 1 year, right? I'll record for 1 year. I hope you are okay with this 4167 divided by 2. Are you okay with this? Right? So my deferred revenue liability will be debited by this amount. Okay. Now, anyone has any problem with these accounting entries? I hope there is no problem with these accounting entries, my dear friends. Anyone has any problem with these accounting entries? Yeah. Let me know if you are not able to understand these accounting entry. Please let me know. Anyone having any problem in these accounting entries? No? Very good. Now, so what about the second service? It is saying that assume that the customer has not availed the second maintenance service. The customer has not availed. The time has elapsed. My dear friends, tell me in the FY 24-25. So basically, when you purchase this air condition 15th May, what was the purchase date? 15th March 23. When the first maintenance service will expire? When the first maintenance service will expire? The first maintenance service will expire on when? When the first maintenance service will expire? The first maintenance service will expire after 1 year, 14th March 2024. And when the second maintenance service will expire? 14th March 2025. So if the customer will not avail the service, if the customer will not avail the service by 14th March 2025, whether he is entitled to receive the service? After 31st March 2025, which is 14th March 2025, is he entitled to get the service? Answer is no, because the time has expired. So what accounting entry will pass? Will pass the same accounting entry. Deferred will just book the revenue. Will pass deferred revenue liability account debit to revenue from maintenance service, the same amount. Will pass the same amount of accounting entry. Okay. Yes or no? Anyone who has not understood this, please let me know. Anyone who has not understood this, please let me know. So being revenue recognized to the extent of delivering the first maintenance performance obligation, being revenue recognized to the extent of delivering, to the extent of expiry of second maintenance performance obligation, right? Second maintenance performance obligation to the extent of expiry of second maintenance obligation. Okay, I hope is that clear. I hope this is clear to everyone, my dear friends. Now if I look at my revenue, instead of recognizing a revenue in 1 year, I need to recognize my revenue in 3 years. I need to recognize my revenue in 3 years. Okay, I need to recognize my revenue in 3 years. If you see, I recorded my revenue in 22-23 for 40,000. What will be my revenue in 23-24? What is my revenue in 23-24? This plus this plus this, right? 7917. What is my revenue in 24-25? 2083. What should be my total revenue in 3 years? Equivalent to the transaction price. Equivalent to the transaction price. What is my transaction price? 50,000 rupees. So this is what I am receiving. So whatever I am receiving in total, that will be my total revenue. That will be my total revenue. Yes or no? That will be my total revenue. Okay. Right. So this is what it is. Okay. Correct, my dear friends? In continuation of the above example, assuming the customer has availed the second maintenance service on 25th March 2024, तो क्या होगा? So what is my purchase date? 15th March. Expiry of first maintenance services 14th March 24, but availed on 30th November. The expiry of second maintenance services 14th March 25, but it was availed on 25th March 24. तो क्या होगा? What happened in that case? Whether any change, whether the entry will change for FY 22-23? No. No accounting entry will change in the 22-23. Same accounting entry. What is the accounting entry? Same accounting entry, and let me put the same number here. 50, 40 and 10. Okay. What is the accounting entry in 23-24? No change in the May 23 accounting entry. No change. Okay. What is the next accounting entry? Thirtieth November 23, first performance obligation of maintenance service, first maintenance service, right? What is the value? Okay, then so 25th March 2024, now it comes, it says that the second service was also availed, but when? 25th March 2024. So what accounting entry will pass? Will pass this accounting entry, second maintenance wali. Second maintenance accounting entry will pass here. Instead of expiry, what will we write? Instead of expiry, we will write this, right? Being revenue recognized to the extent of delivering, let me copy from here, to the extent delivering the second maintenance. Friends, do you find any challenge in understanding this 5-step model, accounting entries, how we created a liability, how we recognize the revenues, right? Have you found any challenge? I hope you guys have understood it. If you guys have understood this helicopter view of Ind AS 115, you will be able to understand the Ind AS 115 very well. I can guarantee you. These are the 5 steps. Identify the contract with the customer, determine the performance obligation, determine the transaction price. Okay. Then your allocation of transaction price into the performance obligation on the basis of standalone selling price of the performance obligation, right? Then there is a recognition of revenue at a point in time or over the period of time. Friends, there are a lot of concepts which are lying inside these 5-step model. Okay, lot of concepts which are lying inside the 5-step model. We will discuss one by one, but I believe these 5-step model, how we have done this, right? How we did the allocation, what is point in time, over a period of time, what are the accounting entries, what are the benefits of it, right? I hope we have understood it very well, right? And friends, This allocation is required, this revenue recognition, when you are delivering the performance obligation, then only you are recognizing the revenue. Why? Because it is also meeting the concept of matching concept. For example, Voltas. Voltas is providing an installation service free of cost. Now tell me whether all these people who are coming at your doorstep, whether these are Voltas employees. Answer is no. Voltas has given a contract, Pan India, to the mechanics. For example, if somebody who is driving a car, for example, somebody who is driving a car, okay, someone who is driving a car, so for the Uber, right, is he a Uber employee? Answer is no, he is not an Uber employee, okay. So the point is, I purchased the AC in the year 22-23, and if I would have recognized the entire 50,000 rupees in the first year itself, अगर मैं पूरे 50,000 रुपए पहले साल में recognize कर लूं, if I would have recognized the entire 50,000 rupees in the first year itself, when I will get the installation service done for the customer, I have to incur a cost also. So at that point of time in the year 23-24, when I am providing installation service, when I am providing maintenance service, I have to incur a cost, right? So in my P&L, the cost will come, but in my P&L, the revenue will not come while I have received the money for this cost which I am incurring, but I am not recognizing the revenue, but I am recognizing the cost. So this matching concept was also not matching. So that is why if you look at the standards going by the substance and going by the matching concept, the revenue has to be measured for each performance obligation, and the revenue has to be recognized for those performance obligation only when it is getting satisfied, when it is getting delivered. Till the time the revenue is not getting satisfied, you are not required to record the revenue for that unsatisfied obligation, okay, and you are required to take the amount as a liability, as a deferred revenue liability, as a customer liability. Whatever nomenclature you told, that is okay. Whatever nomenclature you take, that is okay, right? But the point is, till the time period has not expired, or till the time, right, you have not availed these goods and services, right? So the amount has to be shown as a liability. Okay. I hope that is correct to everyone. Is that correct? My dear friends, I hope it is correct. Is that clear? Yes. Now, let me take you on the next part. What is in scope or affected by the standard? Just a theoretical concept, theoretical part. Let's discuss quickly. An entity shall apply this standard to all contracts with the customer except with the following. Leasing contract. Now a landlord has entered into a lease agreement with a tenant. Of course, the tenant, there is a contract, right? There is a contract between the tenant. But my dear friends, is it something where 115 will be applicable or 116 will be applicable for the case of lease agreement? My dear friends, for the purpose of the lease agreement, Ind AS 116 is a specific standard which deals with the leases, and hence Ind AS 116 will be applicable, 115 will not be applicable. Insurance contract. The insurance company is selling the policy to the policy holders. They are the customer. There is a contract. So will it be covered under Ind AS 115? While it is happening with a customer, but a specific standard is there on insurance contract, and hence that standard will be applicable. This standard will not be applicable. Financial instrument under Ind AS 109, for example, receiving a dividend, right? Investing in a debenture, investing in equity shares. So on all these aspects, 109 will be applicable. Non-monetary exchanges between the entities in the same line of business to facilitate sales to customer or potential customers. So there were two companies. Have you seen the Louis Philippi outlet? Have you seen the Louis Philippi outlet for the shirts, trousers, belts, ties? Yes. The apparel outlet of Louis Philippi. Have you seen that? Yeah. So for example, one Louis Philippi outlet is in Rajendra Nagar. There is a place in Delhi. Another one is in Patel Nagar. Another one is in Patel Nagar, for example. So Rohan lives in Rajendra Nagar. Okay. Rohan lives in Rajendra. So Rohan lives in let's say Rajendra Nagar. But Rohan is my customer and my outlet is in Patel Nagar. Rohan wants to purchase goods, purchase some white color shirts. So Rohan called me that Mr. Alok, do you have the white color shirt? I need to purchase two shirts, but I don't have time to come to Patel Nagar. So I told Rohan not to worry. You can purchase the two white color shirts from my friend's Rajendra Nagar outlet. You don't need to come to Patel Nagar. I told my friend that my customer Rohan will come. Can you deliver two shirts to my friend, to my customer Rohan, and I will send you tomorrow. I will give you these two white shirts from my outlet to your outlet tomorrow. Have you understood this transaction or not? Have you understood this transaction or not? Friends, have you understood this transaction or not? Yes or no? It's a barter. It's a barter. It's a non-monetary exchange. It's a non-monetary exchange. उसने उसको शर्ट दी, मैंने उसको शर्ट दे दी, right? It's a non-monetary exchange between the two entities. So friends, in this case, whether this revenue from sale of the customer, this revenue from sale to the customer, is it recorded by the Patel Nagar outlet as well as Rajendra Nagar outlet both? Yeah? Is it recorded by both? Tell me. Answer is no. This has to be recorded when ultimately it is delivered, when ultimately it is delivered by the, when ultimately it is delivered by the, it delivered to the customer, right? The stock transfer is not required to be recorded as a revenue. A Limited and B Limited are in the same line of business. Example. A Limited and B Limited are in the same line of business. A Limited requested B Limited to deliver goods to one of A Limited's customer. A Limited has transferred the same goods to B Limited, which B Limited has sold to the customer. For example, A Limited has a Patel Nagar outlet. There are the 5 goods. B Limited has an outlet in Rajendra Nagar. B Limited deliver 5 goods to my customer, which is A's customer. Okay. And A Limited transfer these 5 goods to B Limited. In this case, the goods transferred from A to B will not come under purview of Ind AS 115. Rather, actual sales to the customer will come under Ind AS 115. So, this A Limited will record revenue when the goods have been sold to the A's customer. He will record the revenue, right? Because ultimately, if you will see, B Limited का B Limited ने 5 goods sell किए, but B Limited got these 5 goods from A. So B Limited has a nil. B Limited has a nil movement in the stock. B Limited was a opening stock of 5 quantity, closing stock of 5 quantity. But what happens with A Limited? A Limited 5 quantity has moved out. Ultimately, it goes to the customer, right? And ultimately, money has come to A Limited. So when these goods were sold to A Limited has recognized the revenue, right? B Limited will not recognize the revenue because B Limited will get the, B Limited is selling on behalf of A Limited and B Limited will get the stock returned from the A Limited, right? So non-monetary exchanges between the entities in the same line of business will not covered under Ind AS 105, right? So let me put this example here. Scope. Okay, is that clear? Then certain transactions do not arise from a contract for customer such as dividend, etc. Okay, so there is no contract with the customer for paying a dividend. So these are also qualify. These are also not qualified under Ind AS 115. Is that clear? Okay. Now, what is the core principle? As I told you that there are 5-step model. This is the heart of the standard. This is the heart of the standard. Have you seen the heart which I have drawn on my PPT? Have you seen the heart? आपको heart दिख रहा है? What is the heart of the standard? What is the heart of the standard? Step number 1, identify the contract with the customer. Step number 2, identify the performance obligation in the contract. Step number 3, determine the transaction price. Step number 4, allocate the transaction price to the performance obligation. Step number 5, recognize revenue when or as each performance obligation is satisfied, which is at a point in time or over a period of time. Okay. Next. Step number 1, my dear friends. Step number 1. We reach to the step number 1. A contract is defined as an agreement. What is the step number 1? Identify the contract with the customer. What is a contract? A contract is defined as an agreement between two or more parties that creates enforceable rights and obligation. Means an agreement which is enforceable at law. When you will say that a contract creates an enforceable right and obligation when there is a penalty. When any party who is back out from the contract, that party has to bear some losses, some penalty. Okay. So a contract is defined as an agreement between two or more parties that creates enforceable rights and obligation. Let me give you an example. So you celebrated the birthday of your son. So one of the guests has gifted a toy from the Hamleys. Have you heard about Hamleys? Hamleys is Reliance outlet for toys, very expensive toys. So you got a toy, Hamley toy for your son from a guest. So the toy was defective. You don't have the bill, you have nothing. The toy was defective. Now, my question to you is, will you say to the guest that that toy was defective? Will you show your guest that you have given my kid, my son, a defective toy? Will you ask a replacement of that toy from that guest, considering that guest is not your close relative? Answer is yes or no. No, you will not say anything. But you bought a same toy from Hamleys. And when you started using that toy, you found that the toy is defective. Will you go to the Hamleys outlet for the return of the toy, for the exchange of the toy? Yes or no? Yes or no? Will you ask a replacement of that toy? Of course, yes. Ravinder is saying, of course, yes, with a great conviction. My dear friends, why in the first place you are not asking for any return or refund, or why you are not saying anything? Why in the second place you are talking about the return or the replacement? Because in the first place there was no contract. You are not acting as a customer. In the second place, you have a contract with Hamleys. You have an invoice. You have a contract with Hamleys, right? Hamleys is obligated to give you the right toy. You have obligated to pay the consideration which you have paid, right? So friends, what is a contract? It's an agreement between two or more parties that creates enforceable rights and obligations. A contract can be written, oral or implied, but must meet a specific criteria. Does not exist if both parties can cancel without penalty. You have a contract. Both the parties can cancel the contract without any penalty. If the party does not have a mood to, if that party does not have intention to fulfill the contract, the party can cancel without any penalty. Is it a contract which is enforceable at law? How you can sue? You will say that he has not satisfied his performance obligation. He will say that I was not obligated. I have cancelled the contract. Okay, right? So friends, there are five sub conditions to this step number 1. Identify the contract with the customer. Number 1. Parties have approved the contract and are committed to perform. Number 1. The contract has to be in the approved stage. You just drafted an agreement and nobody has signed on that agreement. Nobody has agreed to that agreement. Is it a contract? Of course no. Of course no. It is not a contract. Party must have approved the contract and are committed to perform. Each party's rights are identifiable, right? Each party, the supplier rights and the buyer rights, each party's rights should be identifiable in the contract. Each party's payment terms are identifiable. When the amount has to be paid, how the amount has to be paid, payment terms has to be identifiable. Contract has a commercial substance, right? What is meant by commercial substance? Means contract has a business reality, business value. For example, when the exchanges are happening between the entities in the same line of business, the non-monetary exchanges is happening between the entities in the same line of business, does this has a commercial substance? For the Rajendra Nagar outlet, whether selling the goods to the A's limited customer and getting the goods back from A limited, whether it has any commercial substance, it does not have any commercial substance. That is why that Rajendra Nagar outlet has not recorded any revenue. The revenue has to be recorded when the contract has a commercial substance. I hope it is clear to all of you. Yes, when the contract has a commercial substance. Okay. So Manoj told, sir, you are my good friend. Can you teach me FR Ind AS 115 on the weekend? I said, okay, Manoj. Manoj came to my house. He had a lunch with me and he had a session on Ind AS 115 for 2 to 3 hours for the revision session. Right. It was just like a mutual session. It was just like a out of love and affection, out of knowing Manoj. So there was no any contract of paying any money. Right. So tell me, should I recognize revenue for this revision session? Whether this contract which I have committed, even he has blocked my calendar, I have said yes. So whether this contract has any commercial substance, answer is no. This contract does not have any commercial substance, and that is why I'll not recognize the revenue. And that is why I'll not recognize the revenue. Okay. So my dear friends, the last point I will discuss after break. Okay, these first 4 points were very simple. The last point I'll discuss after break. Let's have a break. It's 8:34 now. So we'll start at 8:46. Okay, sounds good. Let's have a break. Okay, we'll start after 12 minutes, 8:46. So friends, we discussed the identification of the contract with the customer, where we discussed what is meant by a contract, right? So we are focusing on contract, and we are saying a contract exists if party has approved the contract, each party rights are identifiable, each party payment terms are identifiable, contract has commercial substance, and the last one is it is probable that the entity will collect the consideration it is entitled to in exchange for the transfer of goods and services to the customer. Very, very important aspect. Very, very important aspect. What is the meaning of this? So the meaning is it is probable that entity will collect the consideration which it is entitled in exchange for the transfer of goods and services. What is the actual meaning of it? Let me tell you. For example, and I'll start with the example. So you you are a garments trader. You are a garment trader. Okay. So you are selling shirts and trousers. Your friend has come and your friend bought, two shirts from you. The price is 4,000 rupees. You sold the shirts to your friend, and it is 4,000 rupees. But your friend has not paid you the money. Normally, he never pays the money at the time of purchase of goods. Okay. So normally he pay after 2 months, 3 months, 4 months. And you are aware that if I have billed him for 4,000 rupees, he will pay me only 3,500 rupees. So he always himself took a discount of 10-12%. Always. So you know that I will not get any amount beyond 3,500 rupees from my friend. Okay. So now the question is, you sold the goods to your friend for 4,000 rupees, and you expect the consideration which you will be able to receive is only 3,500 rupees, right? So now the question is, will you, will you recognize the revenue of 4,000 rupees or recognize the revenue of 3,500 rupees? This is the question. So when you sold the goods on credit, of course you need to recognize the revenue. But the question is, will you recognize the revenue of 3,500 rupees or will you recognize the revenue of 4,000 rupees? Since you are estimating that I will be able to receive only 3,500 rupees. I will be able to receive only 3,500 rupees. Okay. I will be able to receive only 3,500 rupees. Guys, can you answer me quickly? You just need to write either 3,500 or 4,000. Manoj, Ravinder, Rohan, Sai Kiran. Ravinder is saying 3,500. What about others? Rohan is also saying 3,500. What about others? Manish is also saying the same thing. Yes, you are absolutely right. So you need to recognize the revenue to the extent of 3,500 rupee. You need to recognize the revenue to the extent of 3,500 rupee. And Ravinder has also written probability of receiving. Right. So friends, standard says that you need to recognize the revenue when to the extent, you need to recognize the revenue to the extent it is probable that you will collect the consideration. It does not mean that if it is probable that you will collect the less consideration, it does not mean you are not required to recognize any amount of revenue. You are required to recognize the revenue. You are required to recognize the revenue to the extent collection is probable. To the extent collection is probable. Okay. To the extent collection is probable. So collection is probable to the extent of 3,500 rupee, and hence 3,500 rupee revenue has to be recognized. Right? Clear? So let's discuss one more example from ICAI study material also. This example is in study material also. An entity sells 1,000 unit of a prescription drug, means medicine. An entity sells 1,000 units of a medicine to a customer for a promised consideration of currency 1 million. So this 1,000 unit was sold to a customer for 10 lakh rupee. Okay, 1 million means 10 lakh rupee. This is the entity's first sale to a customer in a new region experiencing significant economic difficulty. So this is the entity's first sale in a new region, in a new area, in a new geography. significant economic experiencing significant economic difficulty, and the entity expects that it will not be able to collect the full amount of the promised consideration. And entity expect that it will not be able to collect the full amount of promised consideration. So while they have sold goods worth 10 lakh rupee, but they are saying that they are not expecting that they will be able to collect the full amount. The entity determines that it expects to provide a price concession and accept a lower amount of consideration from the customer. The entity expects to be entitled to rupees 4 lakh rupee only. The entity expects that the customer will not pay the full amount. They himself claim price concession, and the entity will be able to get 4 lakh rupee only. The entity considers the customer's ability and intention to pay the estimated consideration and concludes that even though the reason is experiencing economic difficulty, it is probable that it will collect 4 lakh rupee from the customer. It will be able to collect 4 lakh rupee from the customer. So the entity will recognize a revenue of 4 lakh rupee. The same question is there in illustration number 1. New Way Limited decide to enter into a new market that is experiencing economic difficulty and expect that in the future the economy will improve. New Way Limited enters into an arrangement with a customer in the new region for networking products for promised consideration of 12,50,000. At contract inception, New Way Limited expects that it may not be able to collect the full amount from the customer. Determine how New Way Limited will recognize this transaction. So New Way Limited will recognize this transaction only to the extent the collection is probable. Sir, for example, in this case, they are experiencing when they sold the goods in a new region, they sold the goods for 10 lakh rupee, but they are expecting a consideration of 4 lakh rupee only. But they are expecting a consideration of 4 lakh rupee only. Okay. Now the question is, sir, for example, this is the expectation. This is the expectation. So we will recognize the revenue today at 4 lakh rupee. But what happens if actually they will pay 6 lakh rupee? Then what happens? Then we will recognize a subsequent revenue of 2 lakh rupee. Or today we are expecting a collection of 4 lakh rupee only. But when the year end closes, when we hit the year end closer, so we expect no, now the reason is now. So basically we are expecting that we will be able to receive 5 lakh rupee. So when it is probable that this much amount of the collection is probable, right? When there is a reasonable certainty that yes, we will be able to receive this much of amount. So what we will do, we will increase the revenue by that extent. We will increase the revenue by that extent. Okay. When it becomes probable or when actually the amount is received. Okay. So this is the meaning of it is probable that entity will collect the consideration, right? It is probable that the entity will collect the consideration, and to the extent the entity is probable to collect the consideration to that amount, to that extent the revenue has to be recognized. Okay. Clear? Is that clear? Okay. Now friends, in this case, in this standard, so in the first step, like we discussed the contract, we'll talk more about the contract terms, contract units, right? So we'll talk about that also. So yes, let's discuss with the help of this example. Okay. So basically this and the last example were the same. A gymnasium, a gym enters into a contract with a new member. A gym company enters into a contract with a new member to provide access to its gym for a 12-month period for rupees 4,500 per month. So for example, Sailendra went to a gym and Sailendra asked, what is your package? What is the what facility you provide? What is the amount of consideration which I need to pay? So the gym company told Sailendra that we are providing an access for 12 months, right? This is the package, and you have to pay 4,500 rupees per month. But you will be able to cancel your membership without penalty after 3 months. Okay. Specify the contract term in this case. While this is for 12-month period, every month you have to pay 4,500 rupees. But what happens if you have to leave in the first month? Then what happens? You have to pay the amount to the extent of 3 months. But what happens after 3 months? Let's say in the 4th month you decided to cancel. You decided not to continue. Then there is no penalty. There is no penalty. You are not required to pay anything. Okay. So in this case, what is the contract term? Tell me. As we discussed, what is meant by contract? Contract means an agreement which is enforceable at law, right? So after 3 months, can this gym company enforce Sailendra to continue the gym? Answer is no. But in the first 3 months, they can enforce. They can enforce in the sense of they can say that it's your wish whether you join or not join, but at least pay me, at least pay me the consideration for the 3 months. Okay, consideration for the 3 months. So in this case, the enforceable rights and obligations of this contract are for 3 months, and hence the contract term is 3 months. So what is the enforceable rights and obligation, right? So we are talking about enforceable rights and obligation. So in this case, 3 months is the contract term where the enforceable rights and obligation are there. After 3 months, there is no enforceable rights and obligation. Okay. Now, my dear friends, the next part. Contractor P enters into a manufacturing contract to produce 100 specialized CCTV cameras for customer Q for a fixed price of 1000 rupees per sensor. So this P enters into a contract to produce 100 specialized CCTV cameras for customer Q for a fixed price of 1000 rupees per sensor. Okay. Customer Q can cancel the contract without a penalty after receiving 10 CCTV cameras. Okay. So the order is for 100 cameras. Okay. The price is 1000, but this customer can cancel the contract without a penalty after receiving 10 CCTV cameras. So after getting 10 cameras, for 90 cameras, the customer is not obligated. The customer can return it. The customer can cancel the contract. So in this case, what is the contract unit? For what amount of units the enforceable rights and obligations are there? What amount of unit? You can say that contract is there. Okay. So P determines that because there is no substantive compensation amount payable by Q on termination of the contract, that is no termination penalty in the contract, it is akin to a contract to produce 10 CCTV camera that give customer Q an option to purchase additional 90 CCTV cameras, and hence contract is for 10 units, right? So the enforceable rights and obligation are attached to the 10 units, not entire 100 units. Okay. So we are talking about the contracts, right? Now friends, two concepts. So we are discussing identification of contract with the customer. We discussed what is meant by contract. We discussed when there is an enforceable rights and obligation. One of the aspect was enforceable rights and obligation, right? So parties have approved the contract. Each party's rights are identifiable. Each party's payment terms are identifiable. Contract has commercial substance, right? So basically, as we discussed, where there is an enforceable rights and obligation. So now the point is, friends, when a contract can be combined, okay, so we are going to talk about the combination of contract, combining contracts. If there are two contracts with a customer, whether those two contracts will be seen like a single contract, or those two contracts will be seen like a isolated two contracts. Okay. So again, I am repeating. So we are going to discuss a concept of combining the contracts. Why it is important? Let me tell you. For example, the company has entered into 3 contracts with the same customer at a different point of time. Okay. And these were very close period. Okay. So for example, the company has entered into a contract with one customer for supply of the goods on 1st March 2026. On 10th of March, this company has entered into the contract with that customer for the AMC, annual maintenance contract. On the 15th of March, the company has entered into a contract with this customer for the extended warranty. So this entity has entered into a contract with a customer nearly the same time, but 3 different contracts. Now the question comes whether it will be considered as a single contract or it will be considered as a multiple contract, that is 3 contracts, right? So when we can combine a contract, when we cannot combine a contract. Okay. So this is what we are going to discuss here. Standard says that you can combine the contract. Standard says that Whether you can combine the contract or you cannot combine the contract, for that you have to make a decision tree. What is the decision tree? We are going to discuss here. We are going to discuss a decision tree here. Decision tree. The first question, are the contracts entered into at or near the same time with the same customer or related parties of the customer? The first question you will ask, whether the contract entered into at or near the same time with the same customer or the related parties of the customer, right? Means, for example, today you have signed 3 contracts with a customer. So it is at the same time, yes, or near the same time. Like I told you, today you signed a contract, the next week you signed another contract, the next to next week you signed another contract. Okay. So whether the contract entered into at or near the same time with the same customer or related parties of the customer right? If answer is no, the contract has not been entered with the same parties or near the same time or the related parties of the same customer, then it has to be accounted for as a separate contract, not as a contract combination, not as a combining the contract. Okay. But for example, it is yes, this contract has been entered with the same party at or near the same time. Okay. Answer is yes. Then what happened? Then you need to see 3 criteria. Whether any one or more criteria is meeting. Out of the 3 criteria, if any one or more criteria is meeting, right, then you can say that these contracts can be combined and these contracts can be seen like a single contract. These contracts can be seen like a single contract. Okay. Number 1, whether contracts are negotiated as a single commercial package. Whether contracts are negotiated as a single commercial package. For example, I am a teacher. So I have entered into a contract with Rohan for teaching FR. Okay. And just after 1 day, I have entered into a contract with Rohan for teaching auditing also. Question number 1, whether these contracts are entered with Rohan at or near the same time. Whether these contracts are entered with the same party at or near same time. Answer is yes. Near same time, today and tomorrow. Okay. Yes. So near same time. So yes. Now, whether contracts are negotiated as a single commercial package. So I am charging 10,000 rupees for FR. I am just giving you a hypothetical example. I don't have any coaching center. So I am charging 10,000 rupees for FR and I am charging 5,000 rupees for auditing. So Rohan has negotiated. Rohan told, sir, I have already taken a package of FR from you, and today I am also taking this package of auditing from you. Sir, if you will just charge me 13,000 rupees for both the subjects. Okay, FR plus auditing at 13,000 rupees. So I will be happy to take the FR auditing classes also. So what is happening here? So Rohan is saying, sir, don't look at that I am giving you 3,000 rupees for a 5,000 rupees subject. No, you can just see that for 15,000 rupees of the package I am giving you 13,000 rupees. So sir, it is less than 10% discount. It is less than 10%, or I would say it is 12% discount, right? But if you look at 5,000 to 3,000, you will think that it is a 40% discount. So see, here the negotiation is happening. Here the negotiation is happening like a what? Here the negotiation is happening like a single commercial package. Okay. So number 2, consideration in one contract depends on the other contract. Okay. For example, while there are 2 contracts, but the consideration in one contract will depend on the other contract. For example, if the price of the material will be down, if the price of the goods will be down, I will also charge less price for the repair and maintenance. You know, when the gold prices were soaring high and high, the jewelry companies have made the making charges lower. right? For example, when the gold price was 50,000 rupees, they were charging 10% of making charges, example, right? Why they are charging making charges? They are charging making charges for the purpose of, for the purpose of the kind of the efforts and the money they are paying to the mechanics. Okay, I would say mechanic, or I would say those skillful workers who are making the beautiful jewelries. Okay, so now the gold price has become 2 lakh rupee. So when it was 50,000 rupees, they were charging 10%, which is 5,000. But now when it become 2 lakh rupee, will they charge 20,000 rupees? Will they charge 20,000 rupees? Are they paying 20,000 rupees for those skillful workers? Answer is no. They are giving them just by the design of the jewelry, by the time and the efforts they are putting in. So the point is, the increase and decrease of the gold price has also impact on the making charges also. For example, if these two are the separate contracts, right? Number one, purchasing a gold, and number two, designing a jewelry, right? So of course, this change in the gold price is impacting the change in the jewelry, the change in the making charges also. So if consideration in one contract depends on the other contract also, it will be considered as a single contract, means two or more contracts can be combined, right? Number three, whether goods or services are single performance obligation means whether this out of the two contracts they are providing two different goods. Okay, but is it a single performance obligation? Means these two goods and services are not utilized in isolation, are not utilized independently. If answer is yes for any three of this, then it can be combined and it can be accounted for as a single contract. But if the answer is no, no any condition has met, then it has to be accounted for as a separate contract. Let's understand with the help of this example. Manufacturer of airplane. So there is a, like Boeing, Airbus. These are the manufacturer of airplanes. Manufacturer of airplanes for the Air Force negotiates a contract to design and manufacture new fighter planes for a Kashmir air base. So this airplane manufacturer is negotiating a contract to design and manufacture new fighter planes, right? So one contract is for manufacturing of fighter planes. Okay. At the same meeting, the manufacturer enters into a separate contract to supply parts for existing planes at other bases. So on the Kashmir Air Base, they are supplying the airplanes, and in the same meeting with the defense, this manufacturer enters into a separate contract to supply parts for the existing planes. So one new planes. So the first contract is for the new planes, and the second contract at the same time is for spare parts for existing planes. Spare parts for existing planes, right? So friends, in this case, contracts were negotiated at the same time, but they appear to have a separate commercial objectives. Manufacturing and supply contracts are not dependent on one another, and the planes and the parts are not a single performance obligation. Therefore, contract for supply of fighter planes and supply of parts shall not be combined, and instead they shall be accounted for separately. Right, friends, if you see in this case, while the contract has been entered into or at or near the same time with the same customer or related parties, defense, okay, but whether contract are negotiated as a single commercial package, answer is no. The airplanes are different goods and services, and this spare parts are different goods and services. It is not negotiated as a single commercial package. It is not given in the question also. So you will not assume that it has been negotiated as a single commercial package. Whether consideration in one contract depend on the other contract, answer is no, right? It is not dependent. Whether goods or services are single performance obligation, answer is no. These are two different performance obligations. The new plane are the new plane, and the spare parts has to be installed in the existing planes. Spare part has to be installed in the existing planes. Okay, right? Clear? Friends, are you clear? Not clear? I'm not getting any, kind of confirmation from your side, any participation from your side since last 10-12 minutes. Sailendra has told clear. I need the clarity from the remaining 4-5 students as well. Manoj has also cleared. Clear in mind or clear from mind? Clear has two meaning. Manish, the customer is same. There are two things, na Manish. Number one, if the customer would not have been the same, the question would not arise. Since the customer is same, that is why we are asking these three questions. See, if the customer is same, but no any condition is meeting, then it has to be considered as a separate contract. Right? Right? So both the condition has to be satisfied, Manish. Customer has to be same or the related parties, and either of these condition has to be met. So no any condition has been meeting for the last three condition, while the first condition is meeting. That is why this question is there. Otherwise, at the first place, if the customer would not have been the same at the first place, this question would not arise. Okay. Illustration number 5. These illustrations are from the ICAI Board of Studies material. Software company S enters into a contract to license its customer relationship management software to customer B. Okay. So this software company S enters into a contract to license its customer relationship management software to customer B. 3 days later, in a separate contract, right? S agrees to provide consulting services to significantly customize the licensed software to function in B's IT environment. So first contract was to the sale of the software. The second contract was to customize the software so that this software will be able to run in the customer's environment. The customer is unable to use the software until the customization services are completed. Would these contracts be combined? First of all, tell me whether this contract is happening with the same party at or near the same time. Yes or no? Yes. Okay. Yes. Number two, whether this contract is negotiated as a single commercial package. Not clear. Not clear. Right? It is not written in the question. Whether the consideration of one contract, whether the consideration of purchase of software is depending on the consideration of another contract. Not clear in the question. Right? Now third, whether the goods and services of both the contracts are the single performance obligation or are the two different performance obligation. Are the single performance obligation, Manoj. So when I will discuss with all of you the second step, which is determination of performance obligation, when I discuss with all of you the determination of the performance obligation, so it says that when the customer is able to use the product, right? So then only you can say that it is. So for example, in this case, the customer purchased the software. So if the customer has purchased the software, whether customer will be able to use this software without any customization? This customization is happening so that it can be used in the customer's environment. And it is very clear that until and unless the customization will be completed, right, this entity, this customer will not be able to use the software. My dear friends, in this case, tell me, till the time customization will not complete, whether this B, the customer, whether customer will be able to use the software, answer is no. So it will be considered as a single performance obligation, because when these two activity will complete, purchase of software and the customization services, then only it will be considered as a complete performance obligation. You might have a question in the helicopter view, sir, then why installation service and other service, installation service and the stabilizer you have considered as a separate performance obligation? I will cover that later on. So when I will cover the determination of performance obligation, your concept will be clear, right? So I'm just giving you one part of it. In the determination of performance obligation, there are other part also. Okay. So friends, this will be considered as a single performance obligation, and hence these two contracts can be combined. S determine that the two contracts can be combined because they were entered into at or nearly the same time with the same customer, and the goods or services in the contract are a single performance obligation. And the goods or services in the contract are a single performance obligation. Okay, right? Clear? Clear? Now let's come to the contract modification. So first we discussed with these two questions and the concept when the two separate contracts can be combined. Now we are discussing the contract modification. Friends, what happens when there will be a contract modification? When the terms and condition of the contracts are changing. So what is a contract modification? A contract modification is a change in the scope and change in the price of the contract, or change in the price of the contract which is approved by the parties. So what is meant by modification? Whenever there is change in the scope or whenever there is a change in the price. My dear friends, whenever there is a contract modification, will you consider that modification as a separate contract or as a part of the original contract? So it can be treated as a separate contract. It can be treated as a separate contract, or it can be treated as a part of the original contract, right? Which is the remaining modification. So if it is just like an addendum, right? So for example, so nothing is getting changes. So there is a change in the scope or change in the price, but so I'll discuss the terms and condition, but there is a change in the scope or change in the price. So two situation emerges. Situation number one, it can be considered, the new scope can be considered as a separate contract. Situation number two, the new scope can be considered as a part of the original contract, means either original contracts has to be modified, or it will be considered as a closure of the old contract and the beginning of the new contract. Okay, so these two situations can emerge. Now first we will discuss whenever there is a change in the scope or whenever there is a change in the price, or both, right? So when it has to be treated as a separate contract, number one, friends, when the scope of the contract changes due to added goods or services which are distinct means separate, right? The scope of the contract changes due to added goods or services that are distinct, means there is an addition, okay? There is an addition in the scope, means scope is getting wider. For example, a company has ordered 500 mobile phones to Samsung. A company has ordered 500 Samsung mobile phone to Samsung, right? And these mobile phones they have ordered for giving it to their employees, okay? This 500 mobile phones has to be given to their employees. Now friends, after 6 months, while the time period was 1 year, these mobile phone have to be delivered to this company in the next 1 year. But after 6 months, this company has ordered 200 same mobile phones, at a market value. For example, initially 500 mobile phones were ordered. Initially 500 phones were ordered at the rate of 10,000 rupees per phone. And subsequently, after 6 months, 200 additional phones were ordered. 200 additional phones were ordered at the rate of 12,000 rupees. Why? Because the market price has gone up, the raw material has gone up, and the market price has gone up, right? So, and price of the contract increases by the standalone selling price of the added goods and services. So whenever there is a change in the scope, whenever there is an addition in the scope, by providing goods and services which are distinct means separate, right? And the price also increases. The price also increases on the basis of standalone selling price of the addition in the scope, which is on the basis of fair value, market value of the addition in the scope. जब अगर स्कोप इंक्रीज होता है, और स्कोप इंक्रीज क्यों होता है? ड्यू टू एडिशन ऑफ द गुड्स एंड सर्विसेज, एंड प्राइस भी बढ़ रहा है on the basis of market value of those additional goods and services, then it has to be treated as a separate contract. Now sir, whether these 200 mobile phones are distinct, tell me whether these 200 mobile phones are considered as distinct, considered as separate? Answer is yes. Tell me, if when the 500 mobile phone were purchased and the 500 mobile phones are given to the customers, and these 200 mobile phones are getting purchased and they will also provided to the customer, whether these 200 mobile phones are used by the same customer who are using the 500 mobile phones? Answer is no. It can be used by different set of customer, different set of employees, and so those employees those employees will get the utility of those 200 mobile phones. Earlier employees will get the utility from 500 mobile phones. Means these goods and services are distinct. Distinct does not means कि अलग होना. Distinct means उसका utility वो separate है. उसकी utility at the same time दो अलग अलग लोग use कर सकते हैं. Right? Is that clear? Is that clear or not clear? Is that clear or not clear? Yeah, that is clear. Now next part we will discuss. Next part we will discuss with the help of more examples. So let's discuss the example of case 1, separate contract. Example of case 1, separate contract. Example. Of separate contract. Okay, I hope my Excel file is visible to all of you. Example of separate contract. If the scope increased by way of adding goods and services which is different from earlier one. Different का मतलब ये नहीं कि दिखने में अलग. Different मतलब वो quantity अलग थी, ये quantity अलग है. It has a separate utility. And price is also increased on the basis of fair value, market value, standalone selling price of the additional goods and services, for example. So in that case, consider the modification as a new contract. Okay. For example, I have entered into a contract for providing 10 classes, for providing 10 FR classes. So Rohan came to me and Rohan said, sir, I have to take FR classes from you. I told Rohan, the entire FR classes? He told, no sir, I want to read only, I want to learn Ind AS 115 and Ind AS 116. These two standards I want to cover. So I said, okay Rohan, 10 classes will be there, right? And we entered on 1st February, we said 10 classes are there and the rate is 20,000 rupees per class. Okay. The total amount is 2 lakh rupee. So the contract was entered with 2 lakh rupee of the total contract, 10 classes at the rate of 20,000. This is what it was entered. Now, till 31st March, total 8 classes were taken. How much revenue will be recognized till 31st March? How much revenue will be recognized till 31st March? Friends, कितना revenue recognize करेंगे 31st March तक? 1.6 lakh, 8 classes multiplied by 20,000. 1.6 lakh revenue I will recognize. What is the accounting entry? Debtors account debit to revenue. Or if the money has already been received, then what I'll do? First entry bank to debtor, then debtor to revenue, or bank to deferred revenue to revenue, whatever. Okay, right? So bank to revenue, this is what I'm going to cover. Is that right? In the month of March itself, after delivery of 8 classes, the company or Rohan, whomsoever, the company wants to have 5 more sessions. The market value of such training at that point of time becomes 25,000 per session. The total sessions become 15 now. So in the month of March itself, the company wants to have 5 more sessions. Market value of such training at that point of time become 25,000 per session. The total sessions become 15 now. Friends, whether it will be a modification of existing contract or 5 classes will be a new contract. If this 5 classes, due to this 5 classes, the scope is increasing. If if the amount for the 5 classes has to be charged as per 25,000 rupees, these 5 classes will be considered as a new contract. This will be considered as a new contract, right? Because the additional goods and services are sold at the market price for the additional scope. So what will be the new contract value? 5 classes, 25,000 rupees and 1,25,000. Okay. So this 10 classes contract was separate. 5 classes contract is separate. These are the two contracts, right? These two contracts cannot be combined. These contracts will be considered as a separate contract. Is that clear? This will be considered as a separate contract, right? Case number 2. The scope has been increased, but the price has not been increased at market value. What happens? Scope has been increased. Scope has been increased, but price has not been increased on the basis of market value. So in that case, consider the modification as revision in the contract or modification in the existing contract. So in this case, what we will treat? We will treat this modification as a revision in the contract, or we will consider this as a modification in the existing contract. Modification in the existing contract. For example of revision oblique modification in the contract. Initial contract was entered on the 1st February. The total classes count was 10. 20,000 rupees was the per class. 2 lakh rupees was the total consideration. This was the initial contract. In the month of March itself, after delivery of 8 classes, the company wants to have 5 more sessions. The market rate of such training at that point of time become 25,000 per session, but the customer has negotiated at 18,000 rupees for the subsequent session, considering the total number of training, right? The total sessions become 15 now. Market price is 25,000 rupees, but what customer has negotiated? Customer told, sir, Alok sir, customer told, sir, why you are thinking that I am taking 5 additional classes? This contract is for 25 classes. I am buying your classes in bulk, right? So you have to look right from the perspective of 15 classes, not from the perspective of 5 classes, right? It means this contract is getting negotiated. This contract is negotiated as a package. Means this 5 classes contract, this 5 classes value is also getting negotiated on the basis of the 10 classes, right? So in this case, it will be treated as a modification in the existing contract. For example, since the additional goods and services are negotiated at a market price, hence the 5 session will not be considered as a separate contract. It is not negotiated at market price. Rather, this will be considered as a modification in the existing contract. So you need to compute the revised total consideration. What is my revised total consideration? What is my revised total consideration, my dear friends? क्या होगी मेरी total revised consideration? 10 sessions we will get 10 multiplied by 20,000. For 5 sessions we will get 5 multiplied by 18,000. The total I will get 2,90,000. What is my average revenue? What is my revised rate per session? My revised rate per session will be 19,333. What was my earlier rate? 20,000, then 18,000. So what is my recognition of revenue in the first year for 8 classes? What is my recognition of revenue? 8 multiplied by 19,333, 154,667. What was my revenue in the earlier case? When it was at a market price, what was the revenue? When the additional scope was at a market price, how much revenue I have recognized? 160. But when it is not at a market price, what I am doing? I am considering this entire contract of 15 classes as a single contract. So I told for 15 classes I will get 2,90,000. So what is my revenue per class? It is 19,333. So out with 19,333, what is my recognition of revenue for 8 class? 8 multiplied by 19,333, right? Any doubt, any challenge so far, my dear friends? Any question? Any question, any doubt, any challenge, my dear friends? Yes. Journal entry. If value remains same, then the same value. then the average will be 20,000 na. But you need to look at, even though if the value remains same, whether it will be at a market value or it will be lower than the market value. If it is at a market value, then it will be a separate contract. But if it is at a lower than market value, then what you do? Then what you do? You have to you have to of course consider this as a modification of existing contract. So what is the accounting entry? Accounting entry is, for example, sir, would this price increase not for remaining 7 sessions, 2 pending? No. So Rohan, the way how they are negotiating, Rohan, it is you. You have come for the negotiation. What you will say? Sir, I will take remaining 7 class, or you will say that, sir, I am taking 15 classes from you. 10 in the first lot, 5 in the second lot. So sir, please consider this as a 15 class. Sir, I am not paying you 2 lakh rupee only. I am paying you 2,90,000 rupees. आप ऐसे ही तो नेगोशिएशन करते हो. आप कैसे करते हो नेगोशिएशन? ऐसे ही तो करते हो, right? Rohan, will you say only my 7 classes are pending? No. That is how, since you purchased 10 classes, that is why he is ready to give you. I am ready to give you this next 5 class at a discount. And you are absolutely right, Manish. When quantity is more, then more discount. Yes. Okay. So what is the accounting entry? For example, if the entire money has received in advance, then bank account debit to deferred revenue or to advance from customer or to debtor, whatever, right? Then whenever you recognize revenue, debtor or advance from customer, debit, and then credit is your revenue. This is the accounting entry. Okay. Now let's elaborate the case 2 example more. Let's elaborate the case 2 example. We need to elaborate the case 2 example. Okay. The company has delivered 8 sessions. The company has delivered 8 sessions in the last year and closed the books of accounts. Okay, the company has delivered 8 sessions in the last year and closed the books of accounts. In the current year, 2 sessions are still pending. The customer approached the company for 5 more sessions at a negotiated price of 18,000 per session. For the additional scope, suggest what revenue needs to be recognized in the last year and in the current year, assuming the remaining 2 sessions and 5 additional sessions are completed in the current year. Tell me how much revenue has to be recognized in the last year and how much revenue has to be recognized in the current year. Friends, first of all, 8 classes was completed, 20,000 was the rate, total revenue was 1,60,000. Yes or no? Total revenue was 1,60,000. This has already been recorded. For example, assuming company has paid, assuming customer has paid 2 lakh rupee in advance. Okay. So the first entry is bank account debit. Bank account debit. How much? 2 lakh rupee. To advance from customer or deferred revenue. To advance from customer or deferred revenue, right? Okay, 2 lakh rupee. Now next entry. Next entry is advance from customer. So in this case, we have already recognized what is the revenue recognized in the current year? What is the revenue recognized in the current year? Since the additional goods and services are not negotiated at a market price, hence the 5 session will not be considered as a separate contract. Rather, this will be considered as a modification in the existing contract. So what is my revised rate per session? 19,333. Is that clear to everyone? What is my total revenue for the entire 15 sessions? 290. What is my revenue already recognized in the last year? 160. What is my current year revenue? 130. What is my current year revenue? 130. Okay. My current year revenue is how much? 130 na? My current year revenue is 130. So it means I have to recognize my revenue in the current year for 130. So what entry I need to pass? If you see for 8 classes, I have already recorded 1,60,000. For 8 classes, I have recorded 1,60,000. I would have to record 154,667. For 8 classes, how much amount I have to record? For 8 classes, I should have recorded 14667, but I have already recorded. $160 would have to be 154,667, right? So how much extra I have recorded? 53333, right? If you see, in the next year, the less will be recorded. So if I'll go by the average rate, in the next year, the amount recorded would have to be 135,135,333, and the total of course has to be 290. But since I already recorded 160, I'll record 130 now, right? 130 minus 5333 plus 5333. So in a way, you will recognize 130, right? So this is how you have to recognize your revenue. So my dear friends, this revision in existing contract happens in two manners. Updating the existing contract and take the revised impact. Second, terminate the earlier contract and consider the revised contract as a new contract. Okay. Is that clear to everyone? This combination of contract and modification of contract is clear to everyone? Yes or no? Is that clear or not clear? Please tell me. Clear? Okay, let's discuss this illustration number 7. An entity promises to sell 120 product to a customer for 1,20,000. What is the price per product? 1,000 rupees per product. The products are transferred to the customer over a 6-month period. The products are transferred to the customer over a 6-month period. Okay. An entity promises to sell 120 products to a customer for 1,20,000 rupees, 1,000 per product. The products are transferred to the customer over a 6-month period. Okay. So the entity transfers control of each product at a point in time. After the entity has transferred control of 60 products, out of 120, 60 products control has been transferred. And these control are distinct goods. These goods are distinct goods. For example, refrigerator. Every refrigerator has a separate utility. Okay. Separate utility means it can be used separately. So after the entity has transferred control of 60 products to the customer, the contract is modified to require the delivery of an additional 30 product. So initial contract was for 120 product, 60 delivered, 60 left. Now 30 products were added. So what is the total? The total becomes 150 product, right? We need to see, is it a separate contract or is it a, kind of a, whether this will be a separate contract or this will be a amendment in the existing contract we need to look at. After the entity has transferred control of 60 products to the customer, the contract is modified to require the delivery of an additional 30 products, a total of 150 identical products. So the products were identical, okay, but distinct, to the customer at a price of 950 per product, which is the standalone selling price for such additional product at the time of placing this additional order. While for this 120 product, the price was 1,000. For this 30 product, the price has been reduced for 950. Right? And this 950 is nothing, it's a fair value at the time of the placing the order. This is a market value. This is the market value, right? Friends, the additional 30 products were not included in the initial contract. It is assumed that additional products are contracted for a price which reflect the standalone selling price. Determine the accounting for the modified contract. Tell me, is it a modification of a contract, or it will be considered as a, the new scope 30 product will be considered as a, the 30 product will be considered as a new contract? Please tell me. Manoj, tell me, in this case, whether this 30 product which are selling, since with this 30 product the scope is increasing and this 30 products are selling at a market price, fair value, standalone selling price. So whether this 30 products has to be considered as a separate contract, or it has to be considered as a modification of existing contract? Tell me, friends, what it has to be. Separate contract or modification of 30 will be considered as a new contract. You are absolutely right. This is a separate contract. When the contract is modified, the price of the contract modification for the additional 30 product is an additional 28,500, which is 950 multiplied by 30. The pricing for the additional product reflect the standalone selling price of the product at the time of the contract modification, and the additional products are distinct from the original products. Accordingly, the contract modification for the additional 30 product is in effect a new and separate contract for future products that does not affect the accounting for the existing contract, and 950 per product for the 30 products in the new contract. Okay, it is not impacting the accounting of the earlier quantity. Is that clear or not clear? Please confirm. Is that clear or not clear? Please confirm. I hope it is clear. Now let's discuss the illustration number 9. Okay. Again on the modification of a contract. Growth Limited enters into an arrangement with the customer for infrastructure outsourcing deal. Okay. For an infrastructure deal. Based on the experience, Growth Limited determines that the customizing the infra will take approximately 200 hours in total to complete the project and charges 150 per hour. So they have estimated that, approximately 200 hours will be taken to develop this infra, and they have agreed a rate of 150 rupee. 200 multiplied by 150 rupee, right? 30,000 rupees project they have given to this company. After incurring 100 hours of time, Growth Limited and the customer agree to change an aspect of the project and increase the estimate of labor hour by 50 hours at the rate of 100 rupees per hour. So when they completed this 100 hours, they said, oh, we need 100 hours, we need 50 hours of more time. We need 50 hours of more time, right? And they agreed at a price of 100 rupees. So friends, whether it will be a separate contract or it will be a modification of the existing contract. First of all, whether these goods and services are distinct? No, this is a construction activity. The construction work is going on, the development work is going on. So will you say that from the whatever I have completed, so the customer has a separate utility from the aspect where I complete now? No, this is a single performance obligation. This is a single performance obligation. The customer will not be able to get any benefit out of the under construction project, right? It is a modification of existing contract. It is a modification. So now 200 products, 200 hours at the rate of 150, 100 hours already completed. When the remaining hours were 100, so it was estimated that 50 more hours has to be used at the rate of 100 rupees. Okay. Growth Limited and the customer agree to change an aspect of the project and increase the estimate of labor hours by 50 hours at the rate of 100 rupees per hour. Determine how contract modification will be accounted as per Ind AS 115. Two things are missing. Number one, while the scope is increasing, but the goods and services are not distinct. Number two, it is not at the market price. Okay, right? So both are missing. Sir, if it would have been at the market price, still it will not be considered as a separate contract. Why? Because goods and services are not distinct. Okay. So friends, in this case, initial contract amount was 200, rate was 150, price was 30,000. What is the modification in the contract? 50 hours, 100 rupees, 5,000. The total 35,000 rupees contract is there for 250 hours. So the effective price is 35,000 divided by 250. It comes at 140. Okay. Revenue to be recognized. 100 hours have been completed. 100 multiplied by 140, 14,000. But revenue already recognized. 100 multiplied by 150, 15,000. So there has to be adjustment in the revenue from the last year, which is 1,000 rupees. Okay. What is the accounting entry? Shall we discuss the accounting entry also for this illustration number 9? Yeah. Recognition of revenue on completion of 100 hours. Debtors account debit to revenue from sale of services, 15,000. How this 15,000 has come? 100 multiplied by 100 at the 100 hours at the rate of 150 per hour. 150 per hour. Okay. Bank account debit to debtors account. Okay. Then bank account debit to debtors account, money has come. Contract has been modified and the revised price is 140 per hour. In that case, revenue from sale of services account debit to debtors account. Revenue from sale of services account debit to debtors account, right? Debtors account. Is that clear, my dear friends? Yeah. Is that clear or not clear? Please tell me. Yeah. I hope it is clear. Now the time has come. So let me discuss some MCQ to check your knowledge of whatever I have covered. Just a minute. Let me discuss some MCQs. Okay. And friends, what we have covered so far today, we have covered the meaning of revenue, the meaning of contract, and the meaning of customer, right? Today we discussed which is the wider word, whether revenue is the wider word or income is the wider word. We have understood that aspect also. We understood that aspect. Okay. Then, my dear friends, what we have covered and what we have discussed the scope of the contract, scope of Ind AS 115, where we have discussed in the scope of Ind AS 115, we have discussed that Ind AS 115 is applicable on all the contract with the customer except the leasing contract, insurance contract, financial instrument, and the contract between the same parties, and the contract between the same parties, and the contract between the parties in the same line of business for exchanging the goods and services without transferring any consideration. Okay. This is what we discussed. Okay. Just a minute, my dear friends. Just a minute on. Right. Okay. Then we discussed, friends. Uh, uh, Dividend, the contract like dividend, the revenue like dividend. So the income rising from the dividend where contract is missing, right? So these kind of items are outside the scope of the. Outside the scope of the Ind AS 115, right? Then we discussed the step number 1, step number 2, 3, 4, and 5 with the helicopter view example. And what was the helicopter view example? The helicopter view example was that the company has sold an air conditioner stabilizer installation service and the maintenance service, right? And we discussed there are 5-step model. The number 1 was identify the contract with the customer. The second one was determine the performance obligation. The third one was, my dear friends, the third was what? Determine the transaction price. The third one was determine the transaction price. Okay. And the fourth one was allocate the transaction price into the performance into the standalone selling price of the performance obligation as per the fair value of the performance obligation. That is what we discussed. Okay, right? Next, what is the fifth performance? What is the fifth step? What was the fifth step, my dear friends? What was the fifth step? What was the fifth step? Fifth step कौन सा था? What was the fifth step? Yeah. What was the fifth step? Yes, recognition of revenue at a point in time or over the period of time. Recognition of revenue at a point in time or over the period of time. Okay. That is what we discussed. Then we discussed the first step. After the scope, we discussed the first step. Identify the contract with the customer. Discuss. Contract means, what is meant by contract? Contract means an agreement enforceable at law. Contract means an agreement enforceable at law, right? And when you will say that a contract exists, when the parties have approved the contract. When parties have approved the contract means, if it is an unapproved contract, unapproved agreement, will it be considered as a contract? Answer is no. When party has approved the contract, what is the next one? So once the party has approved the contract, what is the next one? Second, each party rights and obligation have been identified. Each party's rights and obligation have been identified. Then the payment term has been identified. The payment term has been identified. The contract has a commercial substance. The contract has a commercial substance and my dear friends, the contract has a commercial substance and what? And what? It is probable that the collection will be received. And friends, then we discussed the meaning of contract term, contract units. Okay. Then we discussed when two or more contracts can be combined, and then we discussed the meaning of contract modification. This is what we have discussed. This is what we have discussed, my dear friends. Okay. So friends, today, now we'll cover 5 MCQ to check your understanding. Tell me the answer of the first question. Tell me the answer of the first question. Which of the following transaction is covered under Ind AS 115? Lease agreement, insurance contract, sale of goods to customer, financial instrument. Which is the right answer? Yes, sale of customer is the right answer. Ind AS 115 does not apply to contract for rendering services, contract for construction of assets, contract for leasing property, contract for sale of goods. Which is the right answer? Which is the right answer, my dear friends? Which is the right answer? Yes, the right answer is contract for leasing property. Which standard covers contract for leasing property? Ind AS 116. Step 1 of the 5-step model under Ind AS 115 requires an entity to identify the performance obligation, identify the contract with the customer, allocate the transaction price, recognize revenue when performance obligation is satisfied. Yes, step 1 is identify the contract with the customer. For a contract to exist under Ind AS 115, which of the following condition must be met? The parties have approved the contract. Each party's rights can be identified. Payment terms can be identified. It is probable that the consideration will be collected, and all of the above. All of the above. It is probable that the consideration will be collected. All of the above. Yes, all of the above. Right. All of the above. If collectibility of consideration is not probable, Ind AS 115 requires the entity to recognize revenue immediately, not account for the arrangement as a contract under Ind AS 115, allocate transaction price to the performance obligation, apply Ind AS 109 instead. If collectibility of consideration is not probable, Ind AS 115 requires the entity to not account for the arrangement as a contract under Ind AS 115. Okay. They should not recognize this arrangement as a contract under Ind AS 115. Okay. So they will recognize this revenue when the probability of collection will be established. Okay. When the collection of consideration probability will be established. I hope it is clear. I hope it is very much clear. I hope it is very much clear, my dear friends. Yes. So friends, we covered with the help of the PPT and the Word file, when the Excel file, we have covered a lot of examples on every aspect. If you see, We started with the overview. We discussed all the definitions, right, with the example. Then we discussed the scope part. Then we discussed, right, the helicopter view with the 5 examples. Okay. Then we discussed the accounting entries also. Then we discussed the contract modification, contract combination. We discussed how the revenue has to be looked in the P&L. We discussed that aspect also. Okay. And we discussed 5 MCQs on the today's concept to check your knowledge. I hope you enjoyed the class today, right? With all these examples. Okay. Yes, Manoj, please ask.
Hi sir, good morning.
Good morning, Manoj.
Uh, Sir, actually, I have material which I have ordered, which is having in April 2023 edition. So, can I use the same for my existing preparation also?
So Manoj, this 2023 material is an old material. I would suggest while 90% of the material would not have changed, but this material got revised. And if you just find out on Google, ICAI Board of Studies Financial Reporting CA final material, for example, you will find a link where you can download these chapters of financial reporting or other subjects from which is freely downloadable, right? You can download from that from this ICI website, and you can save those chapters or standards in your folder. That is number one. When this material was revised in 2025 or so few questions were added in the material. Number one. Number two, lot of examples were added from the real life listed companies also. I was also part of the revision of the material, and hence I am aware that we have added lot of examples from the real life companies. So I would suggest it is better. While major changes are not there, when I say major changes, as I told you, 90% questions, narratives, everything was like same which we have covered in 2023, but few aspects have been changed. For example, after 2023 there were some amendment also, right? There were some amendment also, like the recent amendment is in August 2025, let's say. And in this recent amendment, this August 25, if you are appearing in the next year 2027 exam, this August 25 amendment will be applicable. So basically every year there are some amendment. After 2023 there are some amendment in 24, 25. Okay, so you have to look at those amendments. You have to incorporate the those impact of those amendment in the 2023 material, then you will say that it is complete. Okay, but again, just cutting a long story short, 90% is okay, but for 10% you will find more examples, you will find real life example, you will find amendment also. So my preference and my suggestion would be, refer the latest material. And what you can do, you can just find out that, oh, this illustration is same, this is same. For example, the illustration which I have taken today, this is there in your 2023 material also. Same illustration with the same number, right? Everything is there. Okay, right, Manoj?
Yes, sir, because there is a chance of missing the illustrations if we follow the old material. And
That is why
as
that is why I am telling you. Let's say for if you are reading Ind AS 115, you have a freely downloadable updated material available on the portal on the website. Download it, and if you have the books, physical books, you can just mark, right? You can mark, yes, this is the same, this is the same, this is the same. Okay, so you can compare that, and you can find out what is the change, and only that change you can learn. That change you can refer from your PDF file. Okay, right, Manoj?
yes, sir, thank you.
Okay, yes. So
Sir,
thank
on
you.
this 25, 26, like there is changes na May 25, May 26. There is no major change na in study material latest
No,
25, 26.
no major change. Yes.
Thank you, sir.
Thank you so much, friends. Thank you so much, and have a great day. I hope you have enjoyed the session. And in the next 5 classes, we have 6 classes on Ind AS 115, and we will complete this standard in the next 5 classes, right? So we have 18 hours of study, and we will discuss lot of examples, and we'll discuss lot of important questions from ICI Board of Study material. Like today, we have covered 5 questions from ICI Board of Studies material. Okay. Thank you so much. Bye bye. Take care.
Thank you, sir.
Thank you.